Hi there, this is Alvin from Dr. Well. So over the weekend, we have bad news happening in the Middle East. Iran has launched an attack on Israel, launching over 300 drones and missiles from Iran all the way to Israel. So it is a very provocative act, and I think investors are now feeling jitters, and market seems very unstable because if a war breaks out, what will happen to the stock market. So I'm not a political analyst here, and what I'm concerned about is, as an investor, what should I do with my stocks? Should I sell them? Should I buy more? Should I hold them? So this is the aspect that I'm more interested in, and I hope to share with you my views as well. So a lot of the sharing that I'm going to do with I'm going to share in this video has actually been published in FinBite Insights, and if you want the latest news, do follow that publication of mine. So I keep the link in the description box, and you can just click over to subscribe to the newsletter. So let's go back to the video, and I just want to give you some breakdown of what happened, right? Not so much of the news reporting of how Iran attacked Israel, but more of a bit of that analysis. How would things unfold from here? In my view, right? As I said, I'm not a political analyst over here, but as an investor, it's important to know what may unfold and how would it impact the stock market. Okay, so first of all, my view is that this Iranian attack on Israel, it's even though the number looks very big, right? But I still believe that it is a measured kind of a response to the bombing that happened in Damascus, where the Iranian embassy was bombed by Israeli forces, right? So it was a retaliation on that aspect, and which means this Iranian's attack the purpose was to project that Iran is a strong country, right, and it can able to defend and attack if necessary. So if they don't do anything because the embassy was bombed, it will make Iran looks very weak. So it was more like more in terms of the act of it rather than creating the actual impact to Israel. Why would I say so? Because Iran actually gives 2 hours of warning before the attack. If you really want to inflict damage, you would not give any of this warning. So he gave this warning to the allies, to the neighbors, which one of them include Jordan, which is an ally of US, right? And Jordan also helped to defend Israel against these missiles and drones. So in a way, it is something that the Iran actually wants Israel to prepare for this barrage of attacked. And of course, the US say that that is not true, right? So we don't know exactly what happened. And the next thing is that even if, let's say, the pre-warning was not given, to launch the missiles and drones to hit Israel from Iran, it would take many hours to even reach there. So for that, the Israeli defense forces will have enough time to prepare for the defense anyway, right? So that's why I say that the attack is more in name. The attack is more for posturing purposes, right, to display a particular strength of Iran rather than to really inflict damage on Israel. So that is on the good side of things, right? And now people are wondering, will Israel retaliate? That means launch a counter-strike against Iran. My view is that it's going to be likely, right? The reason is the same as Iran. If Iran wants to project a strong image, likewise, Israel will also want to project a strong image, because if they don't retaliate, it will make Israel look weak. And that also suggests to other enemies of Israel that, oh, you can just launch anything at Israel and it's fine, they won't retaliate. So I would think that Israel will likely be retaliating against this Iranian attack. But I think it will also be measured in a sense. Okay, it could be because they may also give early warning to Iran, right, in this aspect, or maybe strike somewhere that is not critical, right? Because when Iranian attack was launched at Israel, it was at the southern part of Israel, very far away from the capital Tel Aviv, and it was in the middle of the desert. Okay, there was only an airbase there, right? So it's very far away from civilian territories. So hence, I would think that something similar might happen, right, in Iranian soil. And of course, lastly, also because the US will add pressure to Israel. They are already not really happy with Israel launching an assault in Gaza Strip, right? So if they continue to escalate this, it's not going to be good for Middle East as well as for the US. Likely they have to commit more troops, commit more diplomats into that area to resolve the issues there. So hence, I think that every party, right, just want to save face. I don't want to lose my face value, so-called. It's not about inflicting damage. And with that sense, that's why I say that it is unlikely that it will escalate into a full-blown war, but Israel will retaliate, in my point of view. And let's say even if a conflict happens, the war happens between Israel and Iran, I don't think it's going to be a bad thing after all for the stock market. Okay, it may have some short-term impact. This is a list of the previous conflicts and how the S&P 500 actually performed. So you do see there is an impact, right, on a first day basis, on a total drawdown basis. But if you take a look at the number of days to recover, is about 47 days. Okay, so it's only about a month plus. So that means that the impact would not be lasting even if a conflict occurs, just like Russia and Ukraine, right? The war has been dragging on, but yet the stock market in the US have gone up, right? Likewise for Israel versus the Gaza, right? The market has went up as well. And I believe that even if a conflict break out between Israel and Iran, of course we don't hope that happens, that impact to the stock market should also be short term. Okay. And one, of course, big issue is oil, right? Because Middle East is a major exporter of oil, and if a conflict happens in the Middle East, the oil prices is going to go up. And so far this year to date, oil price had already went up 15%, and oil price affects everything because we need energy to produce stuff, we need energy to transport stuff, we need energy to run our electronics. So oil is a very critical commodity that will, if the price goes up, it will increase the prices of everything else. Okay, and therefore, with this means that the US inflation issue may not be totally resolved, as we know that investors are hanging on the hope that the Federal Reserve will cut rates this year, and so far the inflation rate has not gone below the target 2% of the Federal Reserve. Okay, so the last one, which is in March, the inflation rate came in at 3.5%, hotter than expected, right? The expectation was 3.4%. Okay, the difference isn't that big, but even at 3+%, you can see in the chart here, it has hovering above 3% for many months. Okay, it's not going down anymore. Of course, people start to say the last mile is the hardest, right? So it's indeed the hardest. And with oil price going up again, I suspect the CPI or inflation rate will increase further in the subsequent months, and that would again pressure the Federal Reserve to probably postpone or delay any rate cuts that they plan for. And this year, technically, the expectation of a rate cut was supposed to be in June, but after the last FOMC meeting, after some of the minutes have been published, the expectation has been tailored downwards. Okay, so which means June is not the expected rate cut, not the first expected rate cut. The first expected rate cut has been pushed to September. As you can see from here, it's a 0.25% cut. That is what the market expects as of now. And previously, they expected 3 rate cuts in 2024, 0.25% each time. But now it has been reduced to 2 because the next rate cut after September is going to be in December. It's still very iffy, right, whether it will happen, but so far that is what the majority believe, or the consensus believe it to be. So you can see the rate cuts get delayed, the number of rate cuts get reduced in 2024, and therefore it is not a good sign for the stock market. Okay, and the bond yield has also risen, right? So compared to a month ago, the 10-year bond yield was about 4.3%, and the current bond yield has jumped up to 4.6%. So bond yield has also been climbing, which also suggests that the interest rate is going to stay high longer. Okay, so that is what it means. And this is the stock market. This is the S&P 500 index, and surprisingly, it's been very strong since October last year, 2023, last year. And the S&P 500 did not really have a 2% drop for a long time. Okay, for the last 6 months, and it's been very smooth. I read another report saying that it has stayed above 50-day moving average for the longest time as well. So this is a very unusual low volatility period, right? So anybody who has been holding stocks for the past 6 months have been enjoying the calm in the market. But only recently you start to see that the S&P 500 is starting to pull back to some extent. But I still think that the pullback is not enough. Okay, it's still quite far away from the moving average, longer moving average, like the 100-day, which is the blue line, the 200-day, which is the red line. Right? It's still very far from it. At least you should be get closer to the 100-day moving average. Then I would say that the pullback got a chance to complete its cycle. And that also means that generally the uptrend is still there, it's still intact. Okay, so I'm still a bull long term, but I'm probably bearish in the next 1 month, given the Middle East conflict, given the commodity prices going up, given the threat of inflation is coming, given that the bond yield is rising. So with all these things weighing on the market, I do think that the short term wise, the market should come down, the stock should come down, and we should not take it as it's a bad thing, okay? Because stock market don't go up in one straight line. Along the way, you need to come back down, take a rest, take a breather before it continue its own path again. So yeah, bottom line, right? I think long term it is still bull, right? And it could be a good opportunity to buy the dip, so called. Okay, and hopefully now you have a better idea what's going on. I may not be right, but I'm just sharing my views with you, and you decide for yourself. And of course, time will tell. That's how I'm posturing, right? Short term, I will take off more of the trades, stay cash, but for long term, I'm still quite invested. And in fact, I would like to look for some opportunities. If some of the stocks that I love come down to the price that is reasonable, I may buy them up. All right. Thanks for watching. Give me a thumbs up, subscribe to the channel. Do also go on to finbiteinsights.com, finbiteinsights.substack.com. Okay, it's a Substack newsletter. You can subscribe and get the latest news and analysis. As I said, this is an update of what I have actually written on the Finbite Insights last week. Okay, so hope you come on board on the Substack and also subscribe to this YouTube channel so that you not miss the next video. Alright, thank you very much and good luck.